Hello everyone, welcome back. So this is the next episode of our mentorship. So in the previous episode I have showed you about this setup right? So we have seen this, and we actually had a sale. We had a sale right there, and as you can see, we had a black box with these 3 candles. But unfortunately it didn't break out, so we're gonna consider this one, 2 and 3, then that's a sale up there, and then stop loss up there. Okay, so and then next what happened, we got another black box here, so that's a buy up there, stop loss down there, and you just wait for TP2. So based on this, TP2 is around it. So like I told you, so as you can see, we are entering a buyout sale, okay? They're targeting TP3, not TP2. Why? TP2 is at our entry. Okay, TP2 is at our entry, so we are not taking anything off right here. We are taking at TP3, okay, at TP3. So we are entering this trade because there must be some huge black box that TP2 is actually up there. The market cannot go up without a reason. There is something that needs to be fulfilled. So that's why they are marching to the upside. That's why the market is marching to the upside, as you can see. So based on that condition, based on that criteria, we are entering a buy. Okay, beautiful. It is beautiful. Then obviously we have lost this one. I'm sorry, not this one. Up there. It is this black box. Sell. Up there, sell. Stop loss up there. So a little bit profit, and then bam. Trigger. We are out of the trade. Okay. Then in this one, as you can see, pumped 30% off. Pumped now. Stop loss up there. Pumped more. Stop loss up there. Then pumped more. As you can see, stop loss halfway. Then you will be out of the trade, as you can see. As simple. And then what happened? This black box formed. So we're not gonna enter this one because, as you can see, it didn't break the 5% one. I mean, it did. The third candle did, but the fourth candle didn't. So you cannot enter it. Stop loss down there, enter up there, look at the stop loss. We cannot risk that much money. It is too wide. So then next what happened is this black box. So we're gonna use this one for a target, as you can see. TP2 nailed exactly. And then what happened? The market pumped up. What you are seeing here is the market. As you can see, after hitting TP2, it pumped up. So as you can see it moved like crazy. This is the high, as you can see. This is the high of which one? This one right here. This one, this high. This is the start of the uptrend. Right there we bought. Not there actually, but this one. Okay, you can see it here. Right at the start of the trend we bought. Even if it is there, even if it is this one, not actually this one, it's actually this one. It's pumped, another black box sell, pumped, another black box where not anymore. There's no other black box, as you can see. There is no other black box. So exactly hit this black box and look. So as you can see, so which one was it? This one, right? So after hitting this, look, delivery. It's crazy. It's crazy. So it's beautiful. So this is what we are gonna talk now. This is our today's lesson, right? So find the black box here. Right there, right? 1, 2, 3. Did we break? Yes. Stop loss up there. Risk. Risk is too much. Risk is too much. The risk is too much, bro. So what are we gonna do? We're gonna pass it. We'll pass. That's too much risk. That's too much risk. If you want, you can enter a stop loss observer with a small lot. If you would normally enter with one lot, you're gonna minimize that to 0.5. Like if you are trading forex like euro dollar, pound dollar, 0.5 lots, 5 mini lots, right? You are trading one mini lot, 0.1, then minimize that to 0.05, and then you can enter a trade. Look, the delivery is beautiful. TP1 and TP2 is most likely there. Okay. And finally, it changed gears and it finally made the circle model. But since TP2 is hit, we are no longer accepting this. But this can be used as a future support, as you can see, because we moved up, support, bam, support another, bam, support another, bam. This is a black box. Okay. Alright, so this is a huge wick, so we're not gonna consider entering the trade on this one. If you want to minimize risk at all, after the price has hit TP2, you can put your stop loss at break even, but you will miss out on profits too, because the price might support and move further down. So you might miss some potential profits, but you might preserve your capital. Okay, for sure you will make money, and you might you will protect your account. Okay, you will protect your account from the price coming back up there. So price hits TP2 and if it is huge, I mean long way, you can put it at break even. Simple as that. And you are risk free, and you are trading with risk free. The next thing, what happened? We found a black where bam. It's beautiful. That's a buy up there. Stop loss down there. That's a buy. Targeting TP2 up there. Take 30% off. Target TP3 up there. Take 30% off. Now it is time for the for a break even. For the stop loss to come up there at break even. You took 60% off, now 40% is still running up there, right? At your entry actually. I think this thing hit TP4, so you can put it at TP2 and then pump it up, so you can put it at TP3 or stop loss. So beautiful. Okay. It is beautiful. And next thing, what happened? We got another black box here. 1, 2, 3, right? But these two candles, these two last candles are only similar in shape, not this one. This is a full bodied candle, so that's X. Then the third candle traded below the 78.6%. That is good. The criteria is met. Now we are waiting for a breakout, right? So what happened? Breakout up and down there. What is that? A sell. Up there, stop loss. Target. TP1 is up there, TP2. So after TP2, you can take 30% off, put your stop loss at your entry if you want. Okay, that way you can protect your account, and you might miss some profits too, because the market can come back support and move to your direction. Then what happened? Remember, these all are winners. These all are winners. These all are winners. This sell out too. Okay, they are winners. And then 1, 2, 3, right? That's a buy up there. Up there is a buy. Okay, but since as you can see, stop loss down there and the entry up there as risky, I'm not gonna enter that one. I only enter this trade if price comes down there, just like this. As you can see, price came back down there. Stop loss down there. Now I am interested in a buy. I'm interested in a buy. One, if we have a bigger black box, just like this one. Look, this black box. And TP1, TP2 is up there, definitely. It is not hit. Definitely TP2 is not hit. That's why market is marching up and up and up to seeking this price level. Okay. Then what happened? Since I have this directional bias and I know that the bias is to upside, I mean the direction is to upside, we are in a buy program. The algorithm is now seeking higher prices. We are in a buy program. We are moving up. So which means every down movement, every bearish movement is an opportunity to buy, right? But based on this, as you can see, TP2 and TP3 is nailed too. TP3 is not nailed. Okay, it is too close. It was not hit. It is too close. It's too close, but it was not hit. So finally, up there is a fulfilled it upside for this one, for this black box, right? Okay. Then what happened? Since already TP2 is hit, and I am targeting TP3 and TP2 of this black box, TP1, TP2 up there, right? There is a price level, so I can enter a trade based off of this black box down there. This is the silver zone. This down there, my stop loss to here is a golden zone. So the price really came down the golden zone. As you can see, this is a golden zone right there. This, that's a buy, stop loss down there. Of course, it is a hindsight and it seems simple, right? Seems simple, but if you encounter these kinds of things and if you have inefficient black box, previous black box, you are gonna use that for a target, and you are gonna use an entry. Even if TP2 is hit, you can target TP3 for that particular black box that you are interested in, that the price is interacting. Okay, yes, as a buy. Even if you lose this, it is not a big deal. Look the risk. The risk is not too much, bro. The risk is not much. Then comparing this with this one, look at the risk. That's why the third model and the second model are beautiful. They are amazing. Look. The market after entering the buy, contracted up. Look at that, delivered. And what happened? We pump it up. Then what happened? Up there, and up there, right? As you can see, another black box. Did it break? No. Why? This is the order. So it didn't break. It's not trading inside the zone. That is not gonna be used as a potential entry price. No, not gonna happen. Then the next one for this, you can use this one for determine TP, the next TP up there. The price must just continue moving up. Then you can use another formula. I'm not gonna enter this one. Why? Because number one, the stop loss in my entry is gonna be huge. Number two, I have found a small black box that is better than entering this one, but I'm gonna use this for directional purpose. Okay, to determine my price and my target. Okay, potential target. Then what else? Then we found this 2, 3, 4, nothing happened. Then I'm gonna consider this 2, 3, nothing happened. Since fourth one broke down there, that's a sale. Stop loss up there. Okay, stop loss up there, that's a sale. That is a sale. Then what happened? The market almost immediately moved a little bit down. We're gonna measure your TP by using the bodies. TP1, TP2 is down there, most likely never hit, so I'm considering until here, until my stop loss is still a retest. Okay, I'm considering a retest and coming back down to my take profit. So unfortunately the price marched up. We are already in a buy with this one, we are already in a buy with this one. Actually this one is gone. Why? Because we trailed up. Okay, that is gone with profit. With profit. Then what happened? I moved up. So are we gonna enter this? Buy or sell? No. I'm not gonna buy this one. That's my entry up there and stop loss down there. That's a huge risk. No thank you. No thank you. So what are you gonna do now? Nothing. I'm not gonna do nothing now. Now, since look at this. Use this one. And TP1 and TP2 is triggered, so and there's nothing I can do here. There's nothing I can do here. And after TP3 hit, but since I have this one never hit this black box. Where is the one right here? That's actually TP1 and TP2 up there. So it's actually up there, never hit, which means I'm gonna use this down close candle to enter a buy again. I stop loss down there. That's the third model, using this black box as my collateral. My idea to go long, right? So that thing dumped, right? So that's a buy. That is a buy. So not there. Why? Because it has to hit the bodies, not the wick. I don't want the wick to be hit. I want the bodies. Of course, there are some occasions where price might just come down there, and without retesting the black box, it can change direction, move up. Okay, due to the heaviness of the price buy program. Okay, the program is very heavy, and it does not want to kill time. It also involves time. Okay, we have two parameters here. We have price and we have time. I mean, this is price, the y-axis, and the x-axis is time, right? So it might be 6 o'clock. This might be 5 o'clock. I mean 7 o'clock. It obviously increases, right? And this we have 4 o'clock. And we have this price as 1.0 or something, 08 or something. So a price just does not go straight away sometimes. Why? It wants to kill time. It wants to deceive traders. It wants to mislead traders into the accumulate here and broke down. But the real direction is moving up. It broke down, triggering a sale, just like we sold, right? But we are smart. We took a TP2. We know a TP2 is mostly reverse, and we put our stop loss at break even. We are smart. We made money. But the others who think that this price is going to dump, going to hell, might put their stop loss up there and might be long gone. Okay, doing their job, right? They think that they are making money, and when they came back, look at that, the price just reversed the direction. So the price might kill time, just like this accumulation right there. That's killing time. If it was to move fast, it wouldn't waste time. Look at that. That's a huge move. Bam, 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 bam. Within 2 hours, it traversed a long distance. Look at this. Right here, we killed time, right? We killed time. So there is time and there is price. Obviously upside or downside. We have bi-direction. Where bi-direction? So this is it. Okay, so based on this, I'm gonna enter it back down there as a black box. Okay, targeting that TP2 upside. It's beautiful, isn't it? And my stop loss down there, it's not too much. Beautiful. So this is it. This is the general idea. So let's come back to the next one, because we have a lot to talk about, a lot to see. It's the same thing. Look at that. That's a buy I've talked about. And look, it never surpassed the 2.5% is down there. 2.5% is down there. It never came down and hit your stop loss. Since our TP is up there, based on that bigger black box, we can enter a buy based on this one. Okay, buy. Alright, based on this and our target up there. Okay, that's a buy. That's your stop loss. Buy, stop loss. Look at the risk. Almost nothing. Potential reward. That's it. Almost 1 to 20, bro. 1 to 20. That's crazy. Unbelievable. It's unbelievable. So what happened? So anyways, the price pumped. Finally, without hitting TP2, it collapsed. I don't know why. Maybe they want to hit that TP2 in the downward direction, which they have to again move a lot to the downside. Instead of hitting this TP2 right, just like here, and finish everything, they want to make it complex. Now they change the direction, so now they have to dump a lot to the downside. They make things worse for themselves. It's just crazy. So maybe it could be my measurement problem. So you can see TP might be hit. TP1 is the most definitely there. TP2 up there. So maybe TP is it. If that's the case, then I'm not gonna enter this. Not gonna happen. I'm not gonna enter a buy down. Okay. Maybe they have achieved. Yeah. If that was not hit, then that might have did it almost equal. So as you can see, maybe they did hit that TP2. Okay. And I already told you that if this is your target, if this is your entry, the price might come back up there, hit it, come down, and one more time hit it. After that, it comes down, almost a double top. Okay, almost a double top. Okay, it makes a double top. After that second try, you can be sure that that's gonna collapse. It is gonna collapse, bro. If it is not moving up, it will collapse. I'm telling you. Believe me. It only needs two retries, making a double top or a double bottom. So that's it. That's actually it. So most likely TP2 is hit upside, so no entry is upside. But the idea is the same. Okay, if that TP2 is not hit, you're gonna enter it and you're gonna trail your stops. Okay, you will not put it here and price is up there and look the distance. That's not how it works. You have to trail it close. Then what happened? We made another black box where right there the gravestone and the black. As I sell down there, stop loss up there. Okay, targeting down there, that's TP2, TP1, TP2 takes 30% of TP3, take 30%, 60% out. Now your stop loss is at TP2. It can be at TP2. Okay, it can be at TP2, and then the price just collapsed, as you can see. So now you have to trade TP4 hit. Now put it at TP3, and this black box even can protect you. Okay, and then you trail, okay, down. That's as simple as that. Simple as that. That's the same thing that we have talked. It's the same thing. So I wanted to show you the measurements. Look, it is using these candles high. Okay, when you use those two candles, the TP2 is gonna be upset. So it's all about trading. The other thing here is, as you can see, yeah, this black one, I have used this black one, as you can see, TP2, and then this black box even TP2 is the same area. TP3 and TP2 are the same area. It's crazy. This is it. So now let us scan back. Scan back here. It's $0 1 hour time frame that we are talking about here. Okay, almost 20-30 minutes. Okay. So do you see any black box here? Do you see any black box? Maybe yes. Why? Because there is that thing traded, the third candle traded 78.6%. 78.6% is a black box, but we are never entering it back, even if it breaks upside while, because the risk is too much. It's not gonna happen. Okay, we're gonna use this as a directional indicator for directional TP1, TP2 upside. Look, it's so crazy. Yeah. It is crazy. So anyways, that's it. And then we're gonna wait for the next one. Okay, what happened here? We got 1, 2, 3 black box. Did we break? No, we didn't. Then we find another 1, 2, 3. Did we break? No. What about down there? Yes. That's a sale. That's a sale. Stop loss up there. Okay, that's a sale. That's a risk. It is good. It's not bad. It's not bad. It is not bad. That's a sale. Then what happened? It is near your entry. It is near your entry. It's a TP2, which means you're gonna take profit at TP3, 30% of at TP3, and then if you take profit at TP3, the first take profit if it is at TP3, you are not trading your stop to break even. Okay, you are not trading your stop at break even. If you take the first TP at TP3 instead of at TP2, that means your TP and your entry are TP2 and your entry are at the same area. So there is a high chance that the price is coming back up to test the black box, which means it will get you out of the trade without getting money. Okay, without getting too much, a lot of profit. Okay, that you are supposed to. So what happened here? So the price dumped. Then, like I told you, we took 30% of there. Look, it is crazy. Then bumped up, hit that block. I'm not going to say that. Why? It's because I have no unhit TP2. If you go back and find unhit TP2, you're gonna target for that down there. Most likely there is an undelivered TP2 down there. Just go back and find a black box that didn't hit TP2. The first black box. You don't have to go back years and years. You don't. If you go back and find one black box that didn't hit TP2, that's enough. You use that. You use that one for your this trade, for your current trade, okay? For your current trade. So most likely there is a TP2 down there that needs to be hit. And we are already in a bearish trend, that's why price is dumping. Okay. So which means I am selling that one sell. I am selling this one too. The retest is why. This one is done, but the bigger black box is not done. Even after breaking down, now I am reinforced. Now my idea is correct. Now I know that my idea is correct because it broke the downside. This black box is broken to the downside, which means my direction is correct. So I'm gonna I'll smile, right? I'll smile because I know I'm making money. It's going in the right direction, right? And I know it is going to that target TP2 level, maybe TP3 too. Okay. So that's it. Then you trail. Finally, the price came back. It will get you out of that. That's inevitable. That is inevitable. Then the next black box. I want you to see this one. This is a black box. Right? We dumped, and then we pumped. That is a third model. I said is a buy. Down there, it is a buy. Look how beautiful it is. Okay? It is crazy. It's crazy. The third model retests. Third model retest and the second model retest, they are crazy. They are crazy. We're gonna do that if only if there is a TP I didn't hit, because the price can collapse, hitting our stop loss without any regard to our analysis. So there must be some kind of TP to the upside that the price didn't fulfill, okay, didn't hit inefficient black box. So based on this, I don't know why I didn't measure this one. Based on this, TP1 and TP2 is most likely down there. So this is done. When you measure this upside, TP2 is not hit. Okay, so you don't have to do this. You don't have to do this because there is always another black box. There is always another black box. So let me zoom in for you here. We found something here. 1, 2, 3, never broke. 1, 2, 3, never broke. Right? It never broke. 1, 2, 3, never broke. It did break the downside. It did. What is that? That's a sell. That is a sell. It did break the downside. This black box did break the downside. That's a sell. Stop loss up there. Entry down there. That's this right. Target is down there, TP2. After TP2, I told you that you can put your stop loss at breaking, but you might miss another move. Okay, another move. Okay, if you put your stop loss at breaking, as soon as it hits TP2, you are risk free. You will not lose money, bro. You will not, never. But you will miss on potential profits. You will miss on the chance to double your entry amount, to double your profit value. Okay. Then what happened here? The price after hitting TP2, look, I did measure it and TP2 is hit down there. Okay, so it is time to put it at breaking your stop loss. Right? It is not safe, right? the price reversed direction, hit your stop loss, you are out with profit, and then ended up being the circulating. So as you can see, this is the black box. Traded down, traded up. So every move down there is a buy. It is a buy. Okay. If TP2 is not hit, if TP2 is not hit, for what? For the previous bigger black box, or for this setup too. Even for this setup. Okay, even for this setup. Then what happened? Then, since this setup hit TP2, it is done. Now we're gonna wait for another one. So look at that, we got one. Let me zoom in for you. 1, 2, 3, right? 3 of them. And we did break. Stop loss up there, that is not worth it. I'm not gonna take that trade. No thank you. Right. Look at that. Look at that. Stop loss up there and entry down there, that is crazy. It's crazy risk. No thank you. So, but we're gonna use that for TP2 projection. Okay. Sorry for the continuously pausing, frequently pausing. So anyways, so we got the black box we're gonna use for that TP2 projection. And look at that. What is that? I mean, we're gonna use the bodies, and you're gonna see that TP2 is gonna be up there. Okay. And then afterwards, we got another black box that I showed you earlier to see this bigger black box. And guess what? TP2 was not hit, bro. TP2 was not hit, bro. Everything that I showed you earlier, it works. It works. The buy here, it is valid based on this black box targeting TP2 upside. The buy here, it is valid. The buy down there, it is valid, but unfortunately it hit our stop loss down there. Okay, so it never hit TP2, so you gotta trade your stops once you are in profit, or take partials. Take partials. Okay. So it did. As you can see, TP2 is up there. I even didn't measure it properly. Okay, I should have put the body up there, this one up there, and the TP2 would be up there, it would increase. It is so crazy. So the price just dumped. It made equalize, just like I showed you, down there and dumped, which means we are seeking TP2 to the downside. So TP2 might be downside targeting. So whenever you enter a trade, what the hell is this? Whenever you enter a trade there, after that thing breaks this low right there, I said you are targeting TP2 or this black box, TP1, TP2, down there. Okay, good. It is everything. Okay, everything. I showed you everything. And then when we come back, so it's the same thing. It's the same thing, nothing new. Okay, so now this is the same thing too. Right. It is actually zoomed in. It is a zoomed in. So then we come here too. Then we found another black box. Okay, which one? 1, 2, 3, then 4. Now I'm gonna consider this one and this one and this one. So what happened? This thing broke, that's the same. Stop loss up there. Okay. Now I'm targeting TP3. Why? It is because TP2 and my entry are in the same area. So I'm not gonna take partials. There is no partial to take. What would you take? You didn't make money yet. So at TP3 you take partial. Stop loss up there. Never touch nothing. I already told you about that. Then what happened? The price hit that block and dumped. If there is a bigger black box that he didn't hit TP2 down there, so you can enter a sell up there to another one. Stop loss up there, enter down there, bam. That's a risk. Your reward is down there to TP2. That is crazy, bro. That is crazy. It is crazy. It's beautiful. It is beautiful. So this is it. It's everything. So here it says that it is TP2 right here. It's TP2. And up there it says that because the black box, because of the, oh yeah, right. Yeah, we have this black box too. 1, 2, 3. As you can see. Bro, that's a sale. Stop loss is gonna be up there. Okay. Stop loss is gonna be up there. Based on the grid, it did actually get us out of the trade, right? That price there pump, right? There that week and this high and that week, this week is high, higher than this one. So it did hit our stop loss. Okay. So this is a black box. This can be used as a certificate. We bought and then finally we dumped. Okay. If you induct a sell down, okay. Alright. And then next thing, this one is not a black box. Why? It traded halfway, but it didn't trade that 78.6%. It has to trade 78.6%, which means 3/4 of has to be covered up there of this kind. Okay. Essentially they have to overlap on each other. Okay, to make the two candles. It is critical. It is very critical. So that's it. Now let's go to the next one. This is the same thing without drawing. So this is the next one. Find me a black box here. We got one where 0, 1, 2, 3. Buy. Stop loss down there. Would you take this trade? No, I wouldn't. This is crazy. Too much risk. This is just too much risk. So what do? You use this to determine TP2, TP1, and TP2 upside. The same area as this. Okay. Then you wait. What happened? You form another 2, 3. 2, 3. That's a sell. So entry down there. Stop loss up there. I know this is too much risk, right? It is risky. It is very risky, so we can pass this one too. Because of this week, it is very risky. If this week was not hit, we could put our stop loss up there and then entry down there and little bit more less risky. Okay. So that's risky, right? So we're gonna pass that one. That one, but we can use a TP2. Look at that. After TP2, what happened? We formed another black box. This. You're gonna use this once, TP2 up there, and then pump it, We're not gonna enter this trade too. Look at that. It is risky. It's very risky. But if it trades down, I'm gonna enter a buy. Targeting this high, right? Targeting this high. So entering a buy here. Stop loss still down there. That is still risky. Still risky, right? Maybe this candle is zoomed in, so that's why it seems like it's very risky, but I think it is not. If you zoom out like this, it will be less. Okay. When you zoom in, it seems like it is huge, but it really is not. As you can see, it is very small. It's very small. So what happened? We got another black box where 1, 2, and 3. First we broke the downside, right? We broke the downside. As I said, stop loss upside. So unfortunately, when you measure this, TP1, TP2 was not it, down there. So immediately the market reversed direction. Hit our stop loss. It hit our stop loss. I'm not gonna enter a buy because as you can see it's very risky. It's very risky. And then the price pumped to TP2 of this one. TP1 and TP2 is up there, as you can see. This area is TP2 for this one. Then finally we found another one. 1, 2, 3, 4. A buy, stop loss down there. Right? Okay. Not too much, so I'm gonna enter a buy. Say buy. Stop loss down there. And targeting up there. Right? At least 1 to 1, then 1 to 2, right? So the price could not cooperate, so it came down there and hit our stop loss right there. Okay. When you see it here, this is a black already. Okay. And we really break the upside, right? We really break the downside. What is that? That is a sell. We are in a sell program now. What is the price? It never hit that 2.5% upside. Look at it. Did it? No. It made equalize. Almost equalize and dumped. That's still retest. That is used as a retest. When you measure this kind, this black box is TP2, it is actually down there. That's why the price is rushing there, as you can see it. So it really pushed up, then pushed down. That's the third model right there. Then retest, that is a sell. Bam. Since we haven't hit TP2 of this block. That's why I tell you to find and hit and deliver the TP2. That's gonna be used as a directional indicator, not an entry, but a directional indicator. As you can see, when our risk is very low, very small, we can enter it just like it. TP1, TP2, right? Most likely it's like this. Based on this 50% halfway. We bought, we're never buying this. So stop loss down there in the buying up there, it is risky. We sold, we are never selling that. After buying, we sold. What does that mean? That's the third model, bro. The price is running out of choices now. It has to move down. It is almost a must. Unless the fourth model happens, it is a must. It has to move down to that TP2. That's exactly it did. That is exactly it did. Yes, exactly. There is nothing that will happen outside of those four models. Those four models of the black box. Nothing, bro. Nothing. Simple as that. So what is that? The price just really came to the golden zone, your stop loss and your entry. If you have the patience to wait, you can interrupt there. You can interrupt there. Sell, still a sell. But more than this, you cannot enter down there. You cannot enter a sell down there. Nope. You can enter a sell up there. And your stop loss up there. That is achievable. It is comfortable for me. It's comfortable for me to risk that much and to gain this. While doing this, I am also entering a trade based off of the smaller black boxes. Of course, I lost two, I mean, two trades. I think, yeah, this one sold and then hit stop loss, and then this one bought and then hit stop loss. Okay, it hit stop loss, but I am in a sale. I say I am in a sale up there, two positions here, based off of this targeting down there. Okay, and the crazy thing is, look, TP3 is also found there. TP3 of this black box, not this one. This one's TP2 is there. Right, it's there. That's why this price just made a bullish pullback right there. That's why we take partials right there. Actually, we trail our stops. If you sold the right there, you have to trail. Once the price hits there, trail it at break even. Once the price came down there, trail it halfway. Once the price pumped down there, you trail it. You trail. Okay. That's how you milk the market. Milk it. Simple as that. It's nothing complicated. It's not complicated. Once you have an idea of the previous unhit or inefficient black box, everything is simple. It's nothing. It will be nothing. So anyways, I'm kind of tired now. So I'm gonna have to see you next time. Okay, it is also 1 hour. It's approaching 1 hour. Okay, I'm gonna have to see you next time. Look at that. This is crazy. Look, this is just chopping. It's a chopping market. This chopping market. We're gonna see this. We're gonna make sense of this. Okay, and we have a black box up there too. So then down there, that's beautiful. And we have a black box if that's in buy. That's beautiful. And another buy. And it's amazing. It's amazing. I'll see you the next time. Okay, thank you for watching.